The Bangko Sentral ng Pilipinas has cut key interest rates by 25 basis points at its first policy meeting of the year. The benchmark rate now stands at 4.25%, the lowest in over 3 years. Rates on overnight deposit and lending facilities were also trimmed by 25 basis points each to 3.75 and 4.75% respectively. This brings the Bangko Sentral's total reductions to 225 basis points since it began easing in August 2024. The decision met market expectations as all 16 analysts polled by Business World anticipated a 25 basis point cut. It also came amid weaker than forecast domestic growth, with softened demand weighing on the economy.
We are reassured that inflation expectations remain well anchored. Growth has been softer than expected. Investment slowed. We attribute this to a lack of confidence. But soft data on sentiment show tentative signs of recovery.
And with us now for more is Governor Eli Remolona of the Bangko Sentral ng Pilipinas. It's good having you back on. Governor Eli, welcome to the program.
Thank you. Good morning, Kathy.
Good morning. So was 25 basis points of a cut a unanimous decision by the Monetary Board?
I'm not at liberty to tell you, but there was a large consensus.
Large consensus. So for those who countered, Governor, did anyone favor hold?
I can't tell you, but it was a lively discussion, Kathy.
A lively discussion because, well, we have Secretary Go, who first sat in for the first time.
Yes.
It's his first policy meeting, so that's a representation of whatever the fiscal side is planning to do. What were the lively discussions like when it just does not border on monetary policy but encompasses the fiscal side?
Yeah, so it was lively partly because, as you know, our mandate is low inflation. And so the discussion was, can we still do something about growth while still focusing on inflation? That's where the discussion came from.
So can we do something more about growth, given the bigger output gap that you're now seeing? And this is something that you made a big deal of in the media briefing yesterday. How close or far is the BSP to neutral interest rate?
Well, we now focus on the output gap. We're about 2% below potential. So that gives us a lot of room to ease without causing higher inflation.
Well, I'm just trying to connect the dots here because December, you did say that we're coming to the end of the easing cycle, and now you're saying there's a lot more space for easing given the output gap.
Yeah, in December, during the policy meeting, we did think there was a chance that we would ease again. As it turns out, as you know, we did ease yesterday. But this time, we're looking at a horizon in which there's an extra element of uncertainty. And the uncertainty, of course, comes from the fact that growth was much lower than expected in the fourth quarter of 2025.
All right. Well, you mentioned in that media briefing the 25 basis point cut may help restore confidence. And confidence was a repetitive word all throughout those 40 minutes, boosting investment, consumer spending. So, Governor, what do we need to see to be forewarned that this confidence shock is becoming a deeper demand problem?
Well, it has been a deep demand problem. But you know that confidence and growth are a two-way street. Confidence affects growth, but growth also affects confidence. So we were trying to do something on the growth side in an effort to bring some confidence back, and we hope that works. We don't really know when confidence will come back. We think it will take a few more months. when it comes back, when it will come back in strength. But we don't really know that. Our models say it will come back soon, but that's just our models.
Yeah, and it's really human intervention that's most important
Yes.
and analysis. So what do you think would break that cycle?
Well, I think, as we've said in the past, we need credible reforms, evidence of credible reforms. At the same time, we need a little bit more growth. Because if you're trying to invest, why would you invest if growth is not going up? So we need both. We need growth and we need confidence.
Exactly a two-way street. So if confidence fails to return as fast as you expect, do we read that as a case for doing more cuts? Or would you say at some point monetary policy is done enough and this is now for fiscal and governance reforms to fix?
Yeah, as you suggest, we have very limited tools in monetary policy. Basically, we have tools on the demand side, and we are supposed to focus on inflation. So it's not clear how much more we can do. We're looking at the numbers. We'll collect more data and then decide what can we do that will be helpful without sacrificing our mandate about inflation.
Yeah, the numbers speak loads. When you look at GDP falling below the government's earlier target, led by
Yes.
declines in public infrastructure spend, private construction, because of the corruption fallout. So how much still
Yes.
can monetary policy realistically counter what is in large part a fiscal and confidence shock?
Monetary policy can do a little bit, and that little bit is what we're trying to do.
Well, do you worry that too much focus is now being placed on interest rates as the solution when the bigger constraints may be project execution, governance concerns, and external headwinds like tariffs and geopolitics?
Yes, that is a concern. Yeah, it's inflation. Interest rates can't do the trick. It needs help from other things.
And those other things come from the fiscal side. Did make a mention that this is the first monetary board decision in which the finance secretary, Frederico, sat as a voting member. How
Yes,
closely
yes.
are you coordinating with the economic team on the 2026 budget rollout and infrastructure pipeline so that your policy stance is complemented rather than offset by the timing and the quality of public spending?
I think Dec Go, I call him Dec Go, was very helpful during the policy meeting, and I think he will continue to be helpful. So I welcome his presence on the monetary board.
What were the key items or maybe insights that formed the opinion of a 25 basis point cut from the good finance secretary?
Oh, it was a lively discussion. I'm not. He of course talked about the fiscal side, and he of course expressed his view about what we should do with the policy rate. But it was a back and forth discussion. It was very friendly, and I would say somewhat academic. A lot of numbers, a lot of graphs, the usual stuff, Kathy.
Indeed, which is why you came up with the word nerdy in the media briefing. But Governor, if fiscal support disappoints or is further delayed, would that argue for doing more on the monetary side? Or are you reaching the point where additional rate moves would bring more risks than benefits?
We feel that we're at the point where monetary policy cannot do much more. But as I said, things are very uncertain. We have to crunch the numbers some more. We have to look at more data, and then we'll see.
All right, well, let's get to the risks here, Governor. Does the BSP see any evidence of systemic capital flight linked to the flood control corruption scandal?
We see nothing systemic so far. We, of course, are watching that very closely. We have a group that focuses on systemic risk and focuses what's going on with the banks. And so far, so good. The banks remain healthy. They're well capitalized. They have plenty of liquidity. Our foreign exchange reserves are ample. So on the systemic risk side, we're in good shape.
All right, we got about 2 minutes here. I wanted to ask you about our ASEAN chairship this year. That's been
Yes.
one of the topics in the media briefing. One of your 3 initiatives is really making it seamless for digital payments for
Yes,
everybody.
yes.
What trends are you
Yes.
seeing right now when it comes to digital payments in the Philippines, especially with what you've seen in 2025?
Well, digitalization continues. It's a good thing. At the same time, it brings with it some risks. We worry a lot about cyber risks. So even as we encourage digitalization, we're also trying to get the banks to also make sure that they defend themselves against cyber risk.
Are we still on track to reach the 70% target for digital payments by 2028? Because that is the stated goal in the Philippine Development Plan.
To be honest, Kathy, it's been slow. We're on track, but maybe it will take a couple more years than we thought to get where we wanna go.
Beyond 2028, Governor.
Yeah, I think so.
All right. It was about the same month last year, Gov, if you remember when you told us on this program to keep an eye out on the Financial Action Task Force report, because the Philippines is highly likely to come off that gray list, and come off we did. Didn't we? In fact, the
Yes,
Philippines
yes.
marks its first year off that gray list tomorrow, February 21st. But what are
Yes.
the chances now that we'd be back on that list because of the flood control corruption
Well,
scandal?
I have to admit there's some risk, but we're doing all we can, and I think they tend to appreciate what we're doing. We're doing all we can with money laundering, for example. We're tracking money flows very carefully, and they see that. So I think we won't go back on the list, but of course there is a risk.
All right, that's enough assurance for us. Governor, I'd let you go. Thank you so much, and keep us up to
Thank
speed
you,
on that
Kathy.
confident shock. Governor Eli
And good to
Remolona
see
of
you.
the Bangko Sentral ng Pilipinas.